Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day as well as end of month recap. Kind of weird with the end of month coming right in the middle of the week, but it is what it is. This was the last trading day of January, and we're moving on to February. So January's in the books, and some twists, turns, and everything else in between. Even though the market, has been running pretty well, I think some areas did particularly well, and I will review the sector performance for you for the month so that you can see what areas did well, what areas did not. And I was just looking over the numbers, and man, it's if you were in the good stocks, you had a good month. If you were in some of the areas that did not do well, and there was a bunch of areas that did not do well in January, then your performance probably speaks for itself. But let me get there. I'll get there in just a second with the monthly performance. Let's talk about today first. Well, so Mr. Powell spoke, and he was a bit more hawkish, and I have to say, I thought that this was really how he was going to sound back in December. I was on vacation. I remember that week very, very clearly because I decided to go away the last Fed meeting. We had a lot of events that week, and I just said, it's going to be very difficult to trade. And I went away that week in December, and the market just ran. And it basically, all of those events that happened that week. I think that there was a lot of economic reports. I think that there was also inflation reports. I think it was 12/13. And, I remember I was on a flight. I went down to the Caribbean islands, and I remember like getting a beer and listening to Powell speak with my laptop open, and the market flew. He was very dovish, and to me it was a head scratcher. But the takeaway from that, it's not our job to kind of it's our job to observe and adjust to the twists and turns, not to argue with the price action. I had positions on, and I remember in December, I wasn't long. I wasn't long going into the day, like small caps, which they took off, like a rocket, and they were up. The IWM ETF was up 3.6 or 3.7%. I think it was 3.7% on the last Fed day. And it's tough when that happens because it kind of messes with expectations, because Fed days are not usually that dovish and not seeing that much of a bullish day. And I can go back and kind of give you the sense of what happened on that day. But it was this day, and then there was a follow through gap up day. So super, super strong. And you just don't normally see that on Fed days. So why he decided to come out and be all kinds of dovish on that, I don't know. I again, it was a head scratcher to me. But like I said, you can't dwell on being wrong, or going through something like that, and not to say that I was on the wrong side of the market. I had longs on. I just wasn't long, a lot of small caps and a lot of momentum, high short interest names. But and then the market ran basically until until that last week of December, and then we started to kind of come back in a little bit. So here's where we are. What I would point out here is that we're going to have so this is IWM, of course. This is not the S&P. So I'm going to start with IWM. But notice where what happened here. We were doing okay. I would say not we, but the price action was doing okay, hanging in there above the 5-period moving average. And it is what it is. The IWM is very shifty, and also fairly sideways too, but it has a lot of twists and turns in there. What I'm now focused on is, now that we're done with January, here's the value area for February. And this value area, again, it's based on always the previous period. So this will be lit up come tomorrow. And this was based on all of January's activity, which was pretty much range bound, right? Explored to the downside, the 50-day moving average, and held. It tried it, this besides the first day of the month, The 29th was the high point of the month. And then, got smacked down 2.4%. Big valuary for January, which was based on this December range. So this will be a little bit more easier to watch. However, the negative here is that it's not a breakout. And it's kind of funny because if you flash back to just a couple hours ago, we could have started the month above value and maybe, trending. But IWM is tricky, and it's now kind of inside value, and we'll have to see if that bottom of value will hold. I mean, that's the biggest range. I think the biggest candle today that you saw all month. But again, not a surprise because that's what happens on Fed days, as we saw in here, right? Just a big range. It's the most sensitive, I think, on Fed days because it really moves with interest rates. So I want to talk about that too. TLT kind of got off to a really good start. So I would say, while the negative there is what happened with IWM, and there's going to be a couple other negatives as I go through the other index charts too, but this is a positive to see bonds rally. I think from more of like a structural point of view, because at the end of the day, we're talking about, with the Fed day, does it matter? And they were talking about this on CNBC. Does it matter that they're not going to raise, or that, excuse me, that they're not going to cut rates in March and they may do it another month? I don't think it matters that much. I would be more concerned is if yields were gapping higher, we're basically if yields were ripping to the upside. Now, what we're looking at here is bond prices, which is the opposite of yields. And this rallied and is not breaking down, right? That's where we've come into issue. That's where we really kind of came into issues back last year, is when we had periods where yields went higher, right? And if you look, for example, just the middle of the chart here, right? Towards the end of the summertime, right, we started to, again, sideways is okay, in my opinion. When you start doing this, right, and this means bond prices were going lower, yields were going higher, and the market didn't like that for a good couple months, and it was pretty crappy price action in equities for about 3 months, right, until this finally kind of turned the corner. So the point that I'm getting at, it's good to, I think that this was in question. And I was worried about this, because I think that we were teetering on a breakdown, especially when you look at the weekly chart, right, which was right at the bottom of value for the year, right? This value area, of course, is for the whole year, and it's based on all of last year's activity, and so we're holding in here for now, right? So that's a positive. Now, the other things, right, and again, you kind of have to think about the time frame. So let's look at S&P futures, right? Yeah, so far, and the week is not over. The month is over, but the week is not over. But so far, as we've got the makings of a reversal bar, right? And notice S&P futures too, broke out in the middle of the month. Broke above the value area, and we've lost. Today, since the middle of the month, we were trending above the 5-period moving average. So we lost that today. Next spot you're going to want to watch is the 20-day moving average, and ultimately whether or not we're going to be inside the value area for the month. Why is that important? Well, it just kind of gives you a feel of what, if we're in price discovery and if we're trending, or if we're kind of back in the range, right? And we might start the month there inside the range, right? Depending on what futures does for the rest of the evening, right? So again, this will be lit up tomorrow once we get to the new month, and 4877 is probably going to be right around the top of value. All right, so you could see, look at the volume, by the way, today, right? Qs are also a bit of a, they're a bit of a problem. They will be most likely a bit of a problem area to start the month. All right. They lost the 5-period moving average and come right back down to testing the 20-day moving average. And this most likely will open up inside the new February value area. Again, is that really that big of a negative? No, I think going back to what we experienced in the beginning of the month, right? We had a little bit of a shakeout, right? And what happened once we had the shakeout? Buyers, got excited about that. And it's the same thing, I think, with, some of the earnings that we got, yesterday. I had made it a point that with Microsoft, up as much as it was, where was this stock going to go to on earnings? It just was way too extended. The RSI was way over a 70, so really overbought. So, let this shake out a little bit. They didn't have a bad quarter. It's just the fact that it's a lot of these names are overcrowded. There's not any buyers left. And, overdue for a pullback, right? I mean, this was a heck of a move, right? From where we were in the beginning of the month, so these are huge runs. So, you know, you have to kind of think about, locking some gains up, depending on what your time frame is. If you're a long-term, investor, then you probably don't need to do that because have a different time frame. But if you're trading kind of in the intermediate term or short term, right? I mean, these were really good moves to be, taking some profits into. All right, and even this stock, right? Nvidia is still, I mean, was only down 2% today. I still think that this, as great as this company has been on this breakout, right? And this was one of my best performers for the month. But a check back to the 20-day moving average would be healthy, right? It would get people a little bit more excited about the price action. So that's the thing that I think people overlook. I think if you're a newer trader, you get nervous about down days. If you're a more experienced trader, you actually like some of the down days in an uptrend. Provided that we're not trending down like, we were doing back in 2022 for a while, but you want to, in my opinion, you want to see pullback days, and to get some of that froth, out of that market, because this is difficult. It's very difficult to kind of add, any new, money into this other than day trading, because you're just too extended. Right. And again, look at the RSI, right? Got to about a 84 RSI. I'm surprised that for some reason I didn't quote that a couple of days ago, but I mean, these things really got cooked. So, I can't tell you where these things are going to come down to. I'm sure I would like to see a move down to the 20-day moving average, but as I talked about in yesterday's video, provided that the market can kind of settle in a little bit after this Fed meeting, and sometimes we do have follow through to the downside after a Fed meeting. That's could be in the cards for tomorrow, but let it shake out a little bit, because as I mentioned in yesterday's video, there's a lot of good, there's been a lot of good earnings reports. And when you get hit with overall volatility like you did today, there's not going to be a lot of hiding places. As you can see in this spreadsheet for the day, I mean, this is different than, prior to the Fed meeting, the market was holding up pretty well. The breadth was actually positive for the day, right? So there were some things that were acting really well. Here's what I'm referring to, right? So if we blow this up a little bit, right, again, this is up volume versus down volume, different exchanges, but you could see like it was doing, if most of these lines were all slightly positive for the day. It's really on that the last hour of the day where the selling pressure got hit, and that's basically with Powell saying that it's unlikely that they're going to cut interest rates in March. Here's what the Fed Fund futures, so that you could see. I'm surprised that it is staying at a 37% chance that they're going to cut interest rates. I think it should be closer to like 15 or 20%, but this is the market. Again, I can't argue with that. It's what Fed Fund futures are implying. So this did drop. It was 50% prior to the Fed meeting, and it's dropped to a 36% chance. Now, again, why isn't it going lower? Well, who knows? We're going to get so much more data before the next Fed meeting. We're going to get 2 more CPI reports, which could move things. And don't forget, on Friday, we're going to get a jobs report too. So if the jobs report comes out weak, or if one of the CPI reports comes out and it's negative, who knows? Maybe you could see a cut in March. But if the CPI comes out like plus 0.2% for the month, yeah, then you're probably not going to see a an interest rate cut. All right. Again, just kind of thinking logically. All right. So so let me just go back to my spreadsheet, because now I want to talk about the month performance. S&P, a lot of people were talking about, oh, the S&P is going to finish up for the month. I'm like, why don't you wait until the end of the month? So it did finish up. Don't count your chickens. Before, so it did. The S&P and the Qs finished up for the month, but not by a lot, 1.6%. On the back of it going down, the S&P fell 1.6% today, so it halved the month's gains today, and basically just in a couple hours. Qs also finish up positive. That's up 1.8%. But depending on your index, the mid caps finished down for the month, and look at the small caps finished down 4% for the month. Right. And if you're, I like to look at the ARK ETF just as kind of a proxy for what I call growth at any cost. Down 14% for the month, right? So like I said in the beginning of this video, the live stream, that some things did really well, some things did not do very well this month. The IBD 50 ETF was up 2%, actually nice outperforming there. Growth was up 2.2%, value also positive, but not as strong, even though that's been outperforming over the last 5 days. And small cap growth and value, really small cap value, underperformed decently. All right. And the dollar was up 2.7% for the month, and bonds, which we already went over. Now, here's where it kind of gets interesting. When we look at sectors, there we go. Yep. So sectors. So again, I don't know why I still have pot stocks in here, because it's a $3 stock. I really should take it out of the spreadsheet. So I'm not going to talk about the outperformance. Going from 323, I guess, to 360 is a 11% change. But really, it was the month of the semiconductors, right? The semiconductors had a huge month. Quarter and month are going to be the same here. Also, communication companies did really well. Things like Verizon did very well. So normally I talk about communications, which is Meta and Google, is a good like 45% of that ETF. But there is a lot of other strength in some of the other names. Software did very well for the month, up 3.6%. Medical devices really kind of came on strong at the end of the month. Again, to me, very interesting, how the medical devices performed, and actually like a pretty consistent month, coming down a little bit there. Where I think that's right in the middle of the month. But it's nice to see this group actually, act better. Now it's going to have to deal with some overhead resistance there at 56. Let's call it 57. So it's going to have a test. Notice it failed here at the top of value last year, right? I've talked a lot about healthcare ETFs from time to time. I went some longs, and right at the beginning of the day, I went long some healthcare. Just because I thought it had a chance to, I'm very cognizant of this chart pattern, that I'm giving this the benefit of the doubt. I'm being somewhat optimistic that we could see a breakout in healthcare stocks here. We're right on the cusp of this breakout area. We've got more to do. This was not a great looking candle, and I'm a little bit underwater in the trade that I put on this morning, because I put it on somewhere in here. But it's above the 5-period moving average, above the 20-day moving average. It could get rejected here, and if we lose the 20, I'll probably take the trade off. But I'll try a couple times. I was long healthcare in the beginning of the month and took it off somewhere in here. But I'm ultimately not looking for little moves like this. I'm looking for a bigger breakout on that time frame. So that's what that's what I'm looking at there. And financials did very well, up 3%. I mean, I think that's probably one of the biggest surprises of the month is they had a few of the banks had good earnings, and XLF was up 3.1%. Don't forget, a good portion of that is insurance companies. They also had a really good month. There's the XLV, which is again outperformed. So again, not that many areas, right? You're looking at, again, you kind of have to forget about the pot stocks there. But, like I said, there was a few areas that really outperformed, and you really had to kind of hone in on that, on those groups and capitalize, because there wasn't a lot of areas outside of that. This is amazing to me. Solar, after the year that solar had last year, down another 20%. I mean, that's tremendous. So again, it really reinforces that, the relative strength, which I'm all about relative strength, and I avoid like the plague, relative weakness. My view is always that stocks stocks in a trend, either uptrend or downtrend, can continue in that trend. I don't predict when they're going to reverse. I basically just follow the trend. Had I wished I would have been short the solar stocks, sure. And clean energy was also down 20%. Obviously, a lot of overlap there. Self-driving, not so good, down 16%. Chinese internet names, right? Of all the people that you've heard in the beginning of this month talking about how great the Chinese internet names are going to be, on the bus of, that's going to be the next best thing. Down 13, I don't think so. Down 13.5%. Even with China announcing stimulus, right? If you go back to last week, right, when they got a bounce, what did they get a bounce? They got a bounce in a downtrend, right? Again, anything could bounce, right? And you have to be very careful of those bounces and downtrends, right? And people will do victory laps. Oh, I called it, da 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 da. What'd you call? Nothing. Because it's back down to the lows. All right. Now, maybe we see something constructive here, like a double bottom, but why would you want to call this, right? My opinion is wait until this stops going down, right? At least gets back over the 200-day moving average. And once it gets back above the 200-day moving average, you could try a trade. And if it doesn't work, then you get right out, right? Similar to what PayPal did, right? Another stock that everybody's calling for a long. Now, this may eventually get going. I actually put out a long trade idea, but it disqualified itself within 2 days, right? And that's it. Notice how much, like, that's it. You just give back this, right? And that's the whole thing. Rather than try to make a prediction about the low is in and how great the stock is going to be, let it get. I'll try it again if it gets back above the 200-day moving average, right? Keep it as simple as possible. What else do we want to go over here? Energy stocks try to come back a little bit, but they were your big underperformer for the good portion of the month. Again, not a great looking candle for today, but notice what happened here, right? Maybe a false breakdown, right? So here was the beginning of the month, straight down, and then recovered last month. So going back to I'm not going to go over every sector here because the video will be too long. But how did I finish for the month? And I tweet out my performance every month. I think everybody who runs a service should. I don't know why people don't. Because if you're running a service, you should at least be able to show what you did. If not, right, it's a little bit of what I refer to as a fugazi, right? You're telling people, oh, I wrote a note on a stock, 2 months ago, and now it's up. Okay. But you have to have some skin in the game, right? Anybody can do that. BS stuff, right? And that's all that it is. It's good salesmanship, right? But you should be reporting your results if you're running a service, in my opinion. I finished up 4% for the month. I gave back some gains today. I probably had on a little bit too much exposure. I made a mistake or two today too. So here's my trades for the day. Again, this is not stellar. I stopped myself out in the morning of ST&E, which was my worst performer. I put IWM on at the wrong time today. I thought we were seeing a little bit of a reversal, right? So that's a bad trade. That's all on me. That's not on Powell or anybody else, right? That's all my fault for just bad timing, doing something like that. And, it's better to just observe, I think, on Fed days, or if not, you have to be really quick. But yeah, and just the final thing is, if you're not seeing the price action that you're looking for, or if you start to see a breakdown, right? I don't sit on my hands and I don't, piss and moan about it. I act on it, right? I take some trades off. It's no problem being down one day. You just really don't want to have it fall over to a week, have a bad week or a bad month, right? And that's all it takes experience with trading, right? It's being very grown up about how you're managing risk, right? At the end of the day, right? And I know a lot of experienced traders talk about this too, but you can't control what happens with the prices, right? And you have to adjust very quickly to what the market is doing. And the more that you can adjust to new information, right, the better that you can limit your losses and not stay wrong, right? It's another expression that you hear all the time, right? It's okay to be wrong, just don't stay wrong. I see some people, on Twitter that they will stay wrong for like a month on end. Sometimes they're like, well, I saw calls in this name. So it's like they think it's magic, right? No, you got to pay attention to the price action. You can always get back into something, but you have to respect your risk. All right, guys, have a great night and good luck on your month ahead. And I'll see you back in the trading room, hopefully.